Hey, how's it going, guys? So today we closed the day at wait, hold on. I don't even have the price up. There we go. 39.16, and currently we're at post market 39.20. So let me tell you guys why I'm a little bit excited, but I'm still a little bit disappointed in the micro sense. So I'll start off with the micro bearish analysis now. We are now currently micro bearish. Recently, I had thought that on the 3-day chart that we were going to see a flip of the MACD, but it turned out that we further expanded this MACD line into the downtrend. We also have a RSI that's testing the neutral zone, going into more of a bearish pattern. And then we also have the stochastic indicator showing that we might see a flip to the downside as well to coincide with the candles that are forming. So there's no real divergences here. Everything seems to be laying out to show micro bearishness during the downtrend. And then, but in the macro sense, we are still bullish. We were still able to hold up this. Well, I mean, not still able to hold up, but we have yet to test this macro trend line that has been forming since August 4th. As everybody pretty much knows by now, we are in a symmetrical triangle. This isn't new news. Everybody's been seeing this play out since probably around mid-October. So in the macro sense, I am still bullish. I would love to see a test of the trend line that was formed from August 4th, and then you also have the test of it at October 27th. And as you can see, it kind of plays out into the same kind of pattern that we see right here, into a smaller scale where you have the established trend, kind of similar to August 4th. Then you have the dip into, god dang, my throat's always dry. Then you also have a dip into a 382 level, which I'll get into in a minute. So on the micro sense, usually if there's no respect of the 0.618, then usually you would talk about retracing back to the 0.786 or somewhere around there, a little bit below, which is usually a crucial support that plays out for any sort of swings that happen in AMC. My theory on this is if we aren't able to get a clean break from between 40.25 to 40.48 in the coming days to try to get back above this trend line that was formed on October 27th, then I do see us getting rejected somewhere around the 40s and descending back down somewhere above 37.25, 37 at the lowest. Some people are saying 38. You know, there's a bunch of numbers getting thrown around, but somewhere between 37 and 38 ballpark is where I see us going. If we were not to have a successful retest and break of the $40 level. So because of that, we are currently micro bearish. However, what's giving me hope is the fact that we did see consolidation above this 0.618 level. On the micro sense, in terms of a time frame, we actually closed in between this, which shows me that we do have a potential to gap up in the morning. And I would not be surprised if I see a gap up test in the morning of the 40s and then a potential breakdown for the rest of the day, leading up to Thanksgiving for a holiday sell-off, leading into Friday, especially coinciding with the macro indicators and trending bullish. I mean, bearish. You also have the daily MACD that just flipped over to the bearish side. However, the key thing to take away from here on a macro perspective is the fact that on the daily, the MACD is still hovering. It has finally hovered above the zero since the zero neutral line since August 26th, which is usually a sign that if we did see another reversal where the two lines, the MACD and the signal line, don't go below the zero line, then you have a potential load up zone. And we've been talking about macro LPSs that have been forming. I do not doubt that, you know, in the long run that we will squeeze. However, I'm trying to change my approach in terms of timing the squeeze in order to not let my followers down on, you know, any false hope that we see. But still sticking to the conviction. Hopefully it plays out, mostly because of the option strike prices that I've been seeing lately. You know, all the 145s. Here's two reasons. Here's two things. With the strike prices, they were written pretty much a day after we peaked out at 72. So whoever wrote those calls, right, and whoever is selling those calls, obviously tends to lean bearish for the stock, right? Now with the run up, what that will do is create a premium flow for anyone buying those calls, and if they go in the money, they now accrue intrinsic value. That's how options work. But if they expire out the money, what happens is the premium on the back end collected by the person writing those calls and whoever sold those calls now collects it off of the what's it called, the options expiring worthless, which does not allow the person who bought the calls to exercise it. Therefore, I hope I'm not getting this wrong, but I think that avoids assignment. I have to look deeper into that. Correct me if I'm wrong down below. Again, I'm new to options, but still, I'm repeating it so that way I'm able to regurgitate this information in a way where I'm understanding at the same time of me explaining it. So I hope I got that correct. So when you have this time zone playing out, um, I would expect that either we saw a last minute rip before those 145s expire worthless, or shoot, maybe even some of the other strikes like the 60s. I know those are kind of popular in December and January. Or you'll have a situation where we would be back holding up until those options are swept under the rug and off the table now, since they are worthless because of the time expiration. And then now you would be talking about potentially moving the squeeze into next year. To me, that doesn't really make any sense, because I would assume that the government has some sort of connection to what's going on, especially with the severity of this play. If they were to just let it run and didn't have all this dark pool volume that was going on the back end, I would assume that they would want to collect our taxes before the end of the year in terms of short-term gains, which why it wouldn't surprise me if we saw late November, early December run up, hopefully to the 50s. But as of right now, we are macro bearish. So I just wanted to point that out real quick. And I want to talk about this the reversal play that I saw today. It was pretty interesting how I used the Bollinger Bands. So usually it's a rule of thumb, basic rule of thumb. This shouldn't be the basis of any trade. You should have other things to confirm this. That usually when a candle closes outside of the Bollinger Bands, it's a good time to place a trade to see the opposite momentum happen based off of the market underlying conditions, right? Now, in something like this, it would not make sense for me to hold a position off of this reversal, since the underlying market condition shows that we are in a downtrend. So the most I'd probably get out of this is either a test of the moving average in the middle of those Bollinger Bands, or slight rejections and maybe a hovering above it. But you would have to see multiple consolidation and stair stepping before we even get a chance to test the upper region again. This is on the 45-minute time frame, so it's really good for swings. Now, what I noticed is that there was an inverted hammer that was forming on the 45-minute in conjunction with the RSI being oversold, along with the stochastic being heavily oversold. I wanted to talk about the stochastic real quick. Basically, you have a K% line and a D% line that usually flips. The K% line usually flips above the D% line when it shows you that a trend reversal within the market underlying condition is about to occur. So what does that mean? Well, within a downtrend, if there is a potential micro uptrend, then you would see that being indicated on the stochastic, and then usually it flows into the RSI, and then afterwards it's confirmed by the MACD. Those are kind of like the big three for me. Now it is based off of a 14 candle moving average, and the formula for it is a little bit confusing, but it takes something like the highest closing price of the last 14 candles and the lowest closing price in the last 14 candles divided by like it's a weird equation. You multiply it by 100 and you get your K% line. Your D% line is basically just the last three average values of like the K% line. I want to say, I feel like I wrote that down somewhere. The equations are kind of wacky, but all in all, usually it kind of works a little bit like the RSI, where you have your overbought and your oversold region, and judging by here, you can see that on the 45-minute, we are actually at an oversold region within this downtrend. So what this tells me is we are not strong enough to break out of this trend unless we are confirmed by volume. However, in the short term, we could potentially get a quick reversal off of this downtrend before it continues into more downtrend. Why? Because you have things on the macro outlook that you have to worry about, such as the support being broken into tomorrow. Also, if you take a look at the moving average, it's sitting exactly where that 0.5 fib level I was talking about, where if it were to get rejected off of that, then in turn in the micro you would be short, and then you would talk about a retracement back down to the 0.786 because there wasn't enough volume to confirm a breakout above that fib level, in conjunction with the moving average, in conjunction with the support that turned resistance at the $40 level. So that will call for further downside up until market conditions are comfortable to see a reversal. Now, judging by the MACD indicator flipping, I would suspect that we do see some pre-market / early market open volume that will spike us up, hopefully to maybe around the 40s. And then I do expect a rejection. I'm hoping to not see a rejection. I would love to not see a rejection. But we're not looking too strong in the micro aspect because we did break that crucial trend line that we had formed since October 27th. And I do expect further downside if we were to head down to these levels. However, it's hard for me to say that we would go all the way down to 37. But because 37 is a historical is part of the historical retracement in terms of the fib levels, I don't count it out at all. I would actually see us attacking this support line next, because this seems to be pretty much around the average price of trading that was occurring back in October, which acted as a lot of support for a lot of people who took positions over here. So I would expect to see some sort of consolidation within this region before we attack this macro bull trend up, and then we were to continue back into the 40s in the long term. So I hope that put things into perspective. Apologies to anybody who lost money today. Not from my conviction personally, but whatever decisions you made with your money. I'm just showing sympathy, basically, because I am one of those people. But off of the swing, I was able to gain some of my losses back. Not too worried about it. There's more money in the street to be made. Trust me. It's nothing to really worry about as long as you have patience and you feel like you don't have to prove anything to anybody. Still trying to get over that hump because it's weird. I'm trying to do music and everything like that. So I feel like I'm kind of like on a time constraint on when I need to get things done in order to But just got to relax and hope things take into fruition for this bullish conviction. So don't count anything out yet, guys. We're still looking macro bullish. Nothing really concerning to see. However, in the micro sense, I would expect the retracement to play out towards the end of the week. If we were to break below the support line right here, however, if we were to have a successful retest and hold above the 40.2 level, then I would expect us to try to attack this trend line that we had established back in October 27th to the 29th. So that's pretty much it for the video, guys. Appreciate you guys for showing me love down in the comments and everything like that. And just make sure to love one another. Respect everybody's opinions. Not everybody's going to agree with you on everything like that, but that doesn't mean you show respect on the back end on doing your part, because at the end of the day, it is your money. And karma does come back around. So really appreciate you guys, and have a good one. Thank you.